Hi guys, good afternoon and welcome to Your Stocks. I'm Pavitra Parekh. We have lots to discuss, but first up, Cipla's numbers are breaking on your screen right now. And all in all, it looks like quite an inline set so far. We have the net profit, which is at around 780 crores. This is versus the estimates that we had of 771 crores. So there's a mild beat on that one. The revenue was also in line. The EBITDA has come in slightly higher than expected. It's at over 1300 crores. So that one looks good. And what also stands out is that the margin has come in at 22.3%. The poll that we were working with was of 21.1%. The stock is up on your screen. It did spike up a little bit after the results as well. But all in all, this looks like quite an inline set of earnings. We are waiting by for the finer details as well. But let me hand it over to Ekta, who's who's standing by, and she has some more highlights from how Cipla's second quarter has looked. Ekta.
Thanks for that. Well, yes, it's, a largely inline set of numbers, like you mentioned. The revenue is up around 5.6% on a year-on-year basis. The EBITDA has grown around 6% year-on-year. So the margins have come in a tad better than what the expectations were. So we were expecting around 21%. So they've come in at around 22%. And this generally is a positive, considering that we have been talking about how Ajanta Pharma's numbers or margins have been impacted quite severely this quarter because of high raw material freight costs. So in such a high inflationary environment, along with the fact that there is generic pressure, there is pricing pressure in the US markets, Cipla has in fact managed to maintain their margins on a year-on-year basis. So 22% is where it's come in at. Even the profit seems to be in line with expectations. So it's come in at a growth of around 11%, 789 odd crores is where the profit has come in at. And this is versus our expectations of around 771 crores. Remember that Cipla itself has been quite an outperformer in terms of a stock, and that is because there is a lot of optimism in terms of what they could deliver in their US business. For this quarter, we were expecting an improvement in the US business. $165 to $170 million is what the expectation was, versus $155 million in the previous quarter, and that would be led by primarily growth in the inhaler portfolio, such as albuterol, which is one of their key inhalers, Brovana generic as well, where market share is expected to increase, and hence the US market would be watched out for quite closely. In terms of the India business, they had one of the stronger COVID-19 portfolio, so there will be some amount of base impact. Whether or not there is double-digit growth, X of the base impact would be something that the street would watch for. Their One India business, which is the category which includes the India generic as well as the OTC portfolio and the trade generic business. Overall, it seems as though it's largely an inline set of numbers for Cipla. No complaints which have come in terms of the performance. We need to get into the finer details in terms of geographies and what the US generic business did this quarter to get to know more. But the fact that they've come out with a stable inline set of numbers should be something that the street will take with both hands. No disappointment come in terms of especially the margins.
Oh, no disappointment at all. Ekta, thanks a lot for taking us through all of the highlights. So, like Ekta pointed out, we are waiting by for finer details on how the India business has fared, on how US is fared. What is also important to watch will be the management commentary. So, we're waiting by to see what they have to say. Remember, their Goa plant was re-inspected. So, we'll watch out for, what the management has to say on that front, on the US sales outlook, as well as the launches that they have lined up. But, to assess the numbers further, let's also bring in Prakash Diwan now. Prakash, good afternoon. I feel like it's become a thing. We talk every day at 2 o'clock, but Cipla's earnings are out now. Cipla's earnings are out, and people just going through the numbers. Looks like a completely inline set. Margin is in fact a little bit ahead of what we expected as well. No disappointments, right?
Oh, absolutely. So my answer also might sound a bit repetitive from what we had on HDFC. Yes, this is a great set of numbers from the perspective that there were a lot of high expectations for Cipla, and that was manifested in the price being very close to its 52-week highs, right? And while some of the other pharma names have been a bit skittish in terms of the performance, this was one name that was expected to deliver, and it has. So, of course, we'll have to wait for the internals to see what's led to all these, good numbers to be out. But importantly, from here on, if there are no disappointments as they are in the numbers, you'll probably see the stock continuously get some more strength if the commentary on the new launches in the US, Braxan and Advair portfolio is also kind of, something that the management sounds a bit optimistic on. And of course, the Goa re-inspection outcome. So all in all, I think it's a great set of numbers. It's difficult to maintain on a high base that Cipla sits on. To keep on performing, not just on a Q1Q, but on a YOY basis as well, they've delivered. So pretty good. And I'm sure the market is in a mood to reward good numbers and punish the bad ones. So you'll probably see this getting repeated here as well.
Okay, well, Prakash, hi, this is Ekta. Just wanted your thoughts in terms of what the biggest risk for Cipla would be from here on, considering that it's an inline set of numbers and the stock is already close to fresh 52-week highs. So like you mentioned, maybe a large part of it is already in the price, but what do you think would be probably the biggest risk?
Ekta, so good companies like Cipla, Reddy's, the only thing that set them back is delay in new product launches. If there's anything that upsets that, what happens is your visibility on cash flows gets a bit strained. And with that strain, what happens is it becomes difficult to maintain high ROCs, right? So if the return ratios start kind of dwindling or getting inhibited, and there's no growth, even if there's revenue growth coming from elsewhere, but your launches get pushed, that is always a big worry. So that's why I said the first thing when Pavitra asked me, I said I would rather listen to the management's commentary on some of these new product launches and how that market is shaping up for them. And some of these drugs some of these molecules are big enough for them to also give you visibility for the next couple of years if everything goes on time. So that's the only risk. Otherwise, I think the India numbers, the respiratory portfolio is something which has been very strong for them, and it will continue to be strong given the fact that while there is enough of a slowdown in the COVID-related business, but then you'll have all the other part of the portfolio that will also start doing better, is my guess. And India as a market, if you see for most players, like Cipla has been fairly rewarding on margins at least. So that is not going to be such a big issue, I believe.
Okay, Prakash, if I ask you to compare between Cipla and Sun Pharma, because both those stocks are actually the more resilient ones within the pharmaceutical space, which one would you probably choose based on the fact that earnings have been as they are in Q2 and they both are sitting close to fresh 52-week highs?
So that's a tricky one. But, given how things stack up for both of them, I think Cipla is the one that might be much more of a steady player. It's proving to be the Rahul Dravid of the team, rather than an MS Dhoni, which Sun can be. Where it could be a bit flashy, it could do well in parts, but it has a bit of too many moving parts. The specialty pharma business is something which, as a portfolio, has always been a bit binary. In terms of outcomes, whereas Cipla doesn't have anything which could be very spectacular. It's boring, but it's steady in terms of growth across the globe. So all geographies could start doing well for it, and it could probably surprise us pleasantly on the upside with a faster growth rate as well.
Okay, all right, Prakash, we're going to leave it on that note because it seems as though the stock is just about flat post its numbers, reacting to what has been a largely inline set of numbers. But we really need to look at the details of the numbers as well, whether or not there's any kind of miss in terms of expectations on the geographies. But based on the headline numbers, largely in line. Back to you, Pavitra.
Ekta, thanks a lot for taking us through some of those details on Cipla. Like Ekta and Prakash both pointed out, we're waiting by for the finer details, and it will be a lot about listening to what the management has to say now on the launches and the geographical breakup as well. But we have spent enough time on Cipla, so we're going to take a short break now. When we come back, we'll get you all of our viewer queries. Our guests will also be joining in. Welcome back. You're still tuned into Your Stocks, and apologies to our guests who are waiting by because we have to postpone that discussion a little bit. Gail's numbers are also flashing on your screen. Net profit at around 1,500 crores. This is versus the estimate that we had of almost 2,000 crores. So there has been a miss on that front. The revenue has come in at 38,500 crores. This is versus the estimates of 35,462 crores. So slightly higher on the revenue front. The EBITDA also seems to be a mild Actually, quite a miss on the EBITDA front. 1,765 is what we have on the EBITDA, so there's quite a miss there as well. And the stock, as you can see, has just fallen off a cliff. It is in the red right now as we speak. Just to run you through the numbers again, of course, we're waiting by for more details, but the basic numbers are on your screen. So revenue, like I point, okay, we have the margin figure as well. It is not looking good. The margin is at 4.6%. This is versus the poll that we had of over 7% on the margins. That is why the stock is perhaps tanking like this. Just to run you through some of the numbers that we have, profit has come in at around 1,500 crores, so there's quite a miss on that one. The estimate was of around 2,000 crores, so there's a miss of around 500 crores on just the profit front. EBITDA on your screen, 1,765 versus the estimates of 2,614, so almost 1,000 crore miss there as well. And the margin is where there's a big disappointment as well, 4.6% versus the estimate of over 7%. That is what we have in terms of the basic numbers. We're waiting back for more details. I'm also going to try and connect with Sonal to see if she has managed to pick up any more details, but that is what we have. Yeah, so let me just, if our guests are connected, I'm going to try to bring them in. Shahina, if you can hear me, we have Gail's numbers, and like I was pointing out, there seems to be quite a miss. The margin has also come in sharply below what was expected. Is this a stock that you track?
Well, I think Gail's numbers definitely look like it has missed some expectations. I think in terms of overall performance, it was expected to have some impact because of higher gas prices. So I am not terribly surprised that the numbers are a bit disappointing. And in terms of the way the stock has performed, I think the stock has really not given you a very good return in the last couple of I would say quarters, and I think it should languish around these levels for some more time.
Okay, should languish around these levels. We also have Sacchitanand, who's joining us right now. Sacchitanand, I don't know if you heard me reading out the numbers, but there seems to be quite a miss on the profit front. EBITDA is sharply below estimates. The margin is at 4.6%. The estimate that we were working with, everything taken into consideration, was 7.6%. Any thoughts on Gail's second quarter earnings?
Well, Pavitra, I think the stock has been oscillating within this particular range of 80, 82 on the lower side, and on the higher side, it has been facing resistance at 92 kind of a mark. So I think immediate basis, we may see some bout of profit booking here, but eventually, I think if you look at the broader structure, it has shown some signs of improvement. So probably this consolidation phase may continue for next couple of months, but eventually we see it breaking above 95 zone. So technically, if you look at the structure looks improving, and probably a decline towards 88 could be bought.
All right, that is the technical view coming in on Gail. We also have Sonal joining us on the phone line. Sonal, we were expecting a weak quarter anyway for Gail, but this seems to have come in well below that as well.
Oh, yes, it has. It is a top-down miss coming in from Gail. Net profits at 1,500 crore rupees versus an expectation of 2,000 crore rupees. But the real miss, Pavitra, has come in on margins at 4.6%. It is almost half of what the street was working with, and it is largely led by the natural gas marketing segment. Remember, we were talking about how they did not get enough volumes from Gazprom because of Russian sanctions, and that has definitely impacted volumes in this particular segment, which has led to their EBIT declining. And this time around in natural gas marketing, they have done EBIT of almost 400 crore rupees. Now remember, it is the most volatile segment for this company. If gas prices go higher, spot LNG that is, they tend to make profits, windfall profits, so to say, on some of their cargoes. But this time they did not get enough cargoes, and hence they could not take benefit of the higher spot LNG prices. This compares with a quarter-on-quarter EBIT decline from levels of 2,400 crore rupees, now sitting at 400 crore rupees. Even on a YY basis, it's a big decline. In the last year, they have made gains of around 1,100 crore rupees in the gas marketing segment. Apart from that, it's the petrochemical segment where the losses are huge. 346 crore rupees of loss in their petrochemical segment, and these two are the reasons why we've seen a big decline. Even LPG is lower, largely led because of lower LPG realization. They were low 15% on a sequential basis. So three segments have not done well for the company: natural gas marketing, petrochemicals, and LPG. Transmission services, they are also lower, but not as bad as feared. So these three segments have led to this big fall in margins this time around. We'll get more updates in terms of volumes and what are they doing in terms of capacity utilization, but definitely a miss on Gail this time.
Oh, absolutely a miss, all-round miss on Gail. And like Sonal was pointing out, it is the margin figure which really sort of stands out at 4.6%. The estimate was over 7%, 7.6%. And remember, last quarter, the company had done around 11% in terms of margin. So you can see the kind of contraction that has come through on Gail. The stock also under pressure. It's currently 0.5% in the red, but you can see that sharp fall on your screen right after the earnings hit us. So that is a roundup on Gail. But with that, I'm going to apologize to our guests and get to them. Sacchitanand, Shahina, thanks a lot for waiting by, and thanks for taking out the time to speak with us today. We have a little bit of time, so I'm going to try to squeeze in as many queries as we can. The first one is Shashank Srivastava. He writes to us from Lucknow. He says he holds 25 shares of HDFC. He holds these at 2,400 rupees a piece, and he wants to know whether he should hold or sell at current levels. Shahina, let me come to you on this one. We also had the earnings which came out yesterday, and it looks like a good set of numbers. He has made a good profit on this as well. Would you advise him to keep holding?
Yeah, I would suggest that the investor continues holding. While the numbers were in line, I think the overall asset quality has improved. They're showing a very good growth in their, the credit growth is going up. Also, I think the overall market is improving with the increased sales coming in real estate. They're doing pretty well, actually. The overall economy is improving and their NIMs have remained stable. So I would suggest that the investor continues to hold. I think with the merger with HDFC Bank, the whole entity will become a very strong bank to hold for the longer term. So one should continue holding at current levels, in my view.
Okay, continue holding at current levels. Let's also bring in Sacchitanand into this conversation. How do you look at this one, and do you concur with Shahina on this? Keep holding HDFC?
Well, absolutely, yes. In fact, both the stocks are performing really well, HDFC Bank as well as HDFC. And if you look at the structure, it is just a replica of each other. So probably he can maintain his stance on the bullish side, keeping a trailing stop loss at 2320. The stock can again move towards 2600, 2700 kind of a zone. But if you look at fresh trading setup, I think HDFC Bank is again looking lucrative. So probably he can also consider, some fresh positions in HDFC Bank with a stop loss at 1320 and a probable target of around 1480.
All right, that is on HDFC. That is the view coming in. But with that, let's move on to our next query. We also have Shweta Prasad, who writes to us from Jammu. She says she holds 50 shares of PNB. This is at 30 rupees a piece. And she has 25 shares of SBI as well at 500. So financials clearly, seem to be dominating our show as well. So Sacchitanand, let me come to you on this. Of course, both of these stocks have done well in, the past couple of days as well. How do you look at it? SBI has earnings tomorrow, of course, but take us through how you look at both of these.
Well, I think this pocket is outperforming, and if you look at the Nifty PSU index itself, we have seen a fresh breakout from a bullish continuation pattern. And if you look at the longer term structure, clearly, if you look at the index, we are still seeing a headroom of around 8 to 10%. So probably she should continue holding on to both these counters. If you look at the structures, I think SBI is still sweeter. She can maintain a trailing stop loss somewhere close to around 545. We are expecting this particular move to extend towards 625 on the higher side. And when it comes to PNB, probably she can hold on to her existing position with a trailing stop loss at 37.
All right, that is the view on both of these stocks. I'm also going to toss it over to Shahina now to get a fundamental perspective on these. Shahina, she's clearly making a profit on both of these. Do you think there's room for lots more of an upside?
Yeah, I think so. SBI, of course, numbers tomorrow. Asset quality is expected to increase. And valuations are pretty attractive. 1 year forward, SBI is just about 1 time adjusted price to book. So it does look good to, even buy at current levels for the longer term. PNB is also a good bet, but I think, I would classify it more like a trading bet. The numbers were a bit disappointing, but valuations there also are not expensive, just 0.6. The price to book is 0.6 and asset quality is improving. So one can look at PNB more as a trading bet and SBI as a long-term investment.
All right, so that is the complete technical as well as fundamental view on PNB as well as SBI. We have time for one more query. That's what my director is telling me. So Shalini Jain writes to us from Chandigarh. She holds 20 shares of Nykaa at 2,000 rupees. She's making losses, of course, in her investments and wants to know whether she should book losses or stay invested and, hope to maybe see a little bit of a recovery there. Shahina, on Nykaa, she bought it at 2,000. It's currently, almost halved in value. Do you think that, if she stays invested, even for a longer term perspective, there is chance of a good recovery in the stock?
I would suggest that she exits currently because we have the 1-year lock-in opening up in the next week. And I would see further selling coming in because, it's priced to perfection. In fact, it is very expensively priced, very rich valuations. So we can see at best consolidation at current levels. I don't see the stock outperforming, a lot of other stocks which are looking very attractive at current levels. So she should exit, relook at it a year down the line.
All right, exit it now and maybe you can take a look once again after a year. Sacchitanand, do you concur with Shahina here? Do you think you should just get out of Nykaa at these levels?
Almost, yes. In fact, the stock has been underperforming. Clearly, it is in a very strong bearish trend. And recently, we saw a bounce back or a dead cat bounce kind of a scenario. Now, if you look at the price action, clearly, it is quoting into its oversold territory. So probably she may get better levels to exit. So as of now, I would strictly say to avoid any fresh long additions here. But probably a good level could be around 1240, 1260 kind of a zone where she can plan her exit.
Okay, got that. Shahina as well as Sacchitanand, thank you very much for joining us. It was a short hit today because of a lot of earnings coming through, but thank you for taking out the time and taking our viewers through all of their queries. With that, we're out of time on the show. The market is absolutely flat. It's blinking red and green, but we're going to wind down now. Do remember, you can, of course, email us all of your queries and we will address them with our experts as well. We're going to wind down, but closing bell comes up next and they're going to take you through the last hour of trade.